Anybody has anything? We saw deals on our end slow like a lot, but now it's picked back up quite a bit. I mean, December will probably be our biggest month. Last month was probably our lowest in a long time. So we're trying to figure that. I'm trying to figure it out why there's a low, but for us, volume has gone down. It seems nationwide. So is anybody buying anything right now, or is anybody in contract or looking at things?
Yeah, I'm actually looking right now. I'm still, Corey, how you been? It's been a while. Yeah, good to be back. It's been a tough 3 months. Actually broke my neck in 3 places. So I was in the collar for a while, where it's just tough to talk. So it's been challenging, but I'm doing better now, and so I'm excited to kind of get back into it.
Dude, oh man, sorry.
Yes, whoever would have thought a front yard zip line would be a bad idea, especially.
Oh man.
Yeah, we strung up a line between 2 trees, and the handle apparatus actually failed, and so sent me crashing to the ground. But so I was really fortunate. It could have been a lot worse. Yeah, there's a good chance that it could make a full recovery as far as range of motion and stuff. But it was scary. When I hit, I lost all feeling in my hands and my arms for 15 seconds. Wow. So as I'm laying there, I really hope feeling returns to my arms and hands, so I can actually get up. But so that's been tough. But I've been listening to your guys' stories and listen to everybody's viewpoints. So excited to get back into it. But I've been looking in Cleveland. I finally got my self-directed IRA set up. Still just looking to do fix and flips there. And the realtor that I'm working with, it's just a real challenge where sellers just don't seem ready yet to accept the drops in value for their house. So they're I'm just going to hang on and rent it. So we're plugging along. I see this as a good opportunity to develop relationships with contractors. Now they're probably not as busy. And certainly in Cleveland, when it's this cold, doing any construction is challenging. But I see this as a good chance to kind of develop relationships, to build on those. So when the springtime and summertime hits, be in a better position, to kind of take advantage of some stuff. But still putting it out there and trying to find deals. So if anybody comes across something in the Cleveland suburb area, or even knows maybe a wholesaler that they've had good experience with, I'll put my contact info in the chat. And would love if anybody has any ideas.
Well, drop your contact, Mitch. And dude, I'm glad you're getting better and recovering. That's a crazy story. I'm glad that you're back on the call, man.
I know. I mean, it's just terrifying that we had friends over, and our friends' kids were playing on that, and they were going. So the thought of something were to happen to them, so I'm glad it happened to me. I would just feel absolutely terrible if something worse happened to somebody's kids or somebody else. But my 12-year-old daughter goes, well, maybe it should have happened to somebody else, because since you're so old, we probably could have just gotten right up and just kind of brushed the dirt off and stopped complaining.
Well, man, we wish you a speedy recovery, Mitch. Please reach out if you ever need anything. And it's not your birthday, is it?
No, it's not my birthday.
Yeah. I was it looks like a happy birthday sign behind you. It's dude.
Oh yeah, that's been up for a year and a half. So you'll probably see that on the next call. It's a running joke that we've just left it up. So we're always ready, when it's one of our birthdays.
Yeah. Well, right on, Mitch. Thanks, brother.
Cool.
So if anybody has any, if or knows anyone out in the Cleveland market, I think I know maybe one person. So I'll check in with them, Mitch, and send you their contact. But does anybody else have anything? Needs, good deeds. I see John Kim's on the line. What's up, John? I will be coming back to Vegas.
Hey.
What's up,
What's up,
brother?
bro?
I met John for the first time a couple weeks ago when we were in Vegas, and we went to Sheena and Chris's meetup, right? And I was like, hey, I couldn't tell if I already met you in person or not, just because we see each other, on the calls here and there and stuff.
Yeah,
Yeah, it's great to meet some of the Coffee Talk family in person.
yeah, absolutely, bro. It was good. It was a good surprise for everyone because no one expected that the whole team was going to show up. So that was cool.
Yeah. Layla actually saw it first. She's like, "Hey, Chris and Sheena's having a meetup. Maybe we should go check it out." And we're in Fortune Builders already, and it wasn't the greatest conference, so we're like, "Heck yeah, let's go." So, but I'm gonna be back on the 18th. I'm gonna be back over there, yeah, because I wanna maybe we can grab coffee or something. We'd love to talk to you about the market out there because we're gonna be looking to buy. So
let's do it, bro. I'll put it in my calendar.
Thanks, John. Right on. Okay, I'll hit you up after. Let me make sure I have your number. Actually, can you drop it to me in the chat or to the group too if anybody else wants to reach out to John? He's in Vegas.
I got you. I'll drop my contact in the chat.
Sweet. All right. Anybody else have anything? Deals? All righty. Well, why don't we just I wanted to just do an open discussion because right now, honestly, there's so much news going on that I'd like to just kind of pick everyone else's brain, and get opinions on what you're seeing out there, wherever you're investing or wherever you're looking to invest. I think the more collective information we have can help us make, important decisions. There was news, right? Jerome Powell, the data is not really showing. I think the jobs report came back and what was the recent number? Well, inflation has gone down a little, but not to what they're expecting, right? So does anybody have any insights on kind of the macro environment that we're in? Thanks, John. I'm seeing in Vegas a lot of, from the numbers I'm seeing as I'm watching the market, is that it still looks like there's some room to go. Even though Vegas has been a market that's been getting hit, it seems like there's still some ways to go. Is anybody else investing in Vegas? I know, John, you are, right?
I'm looking for my first one out here. I haven't bought one yet because I'm still fresh here. But yeah.
Yeah. What have you been finding when you're looking though? Have you been?
A lot of creative finance opportunities with the listings sitting on the market longer.
Yeah.
Because I'm a part of the sub-2 community here too. So a lot of people are doing a ton of agent outreach, and everyone's finding the agents are at least now open to considering that option for their clients.
Yeah, absolutely.
Yeah.
Okay. Thank you, Layla.
Yeah. So this isn't in Vegas, but we've actually been looking to buy a house here in Kailua on Oahu, and talking with our realtor, she's telling us that property values of properties have been dropping so much that the thought, she said, don't even hesitate about making an offer 100,000, 200,000 below asking. We're looking at trying to get a property where we would also be able to have some type of rental. And so even houses that were originally listed maybe at 1.5, 30, 60 days ago, now, they've dropped it 100,000, 150,000. And, our realtor said, don't even feel shy about even dropping another 100, 150,000 off of that. So the tables definitely seem to have turned a bit. I don't think you're seeing that in houses that are in retail condition. I think people are still, like, those are still holding their value well, but, certainly now properties, that, need a lot of rehab. Yeah, I think there's some opportunity, certainly.
Yeah. Yeah. So I think for sure creative financing, like John was saying, is probably the way to go. Because one, if there is debt still on it and you assume it's most likely better terms than what you could get right now, right? Like when it comes to rate and hopefully maybe like the mortgage is like 10 years in already. So now you're paying every month more majority principal instead. Like there's so many benefits of taking over subject to in market environments like this. Like where, like we're gonna go buy a bunch of stuff, right? And like there comes a point where you do tap out on capital that you can, utilize. But fortunately for us, like we have knowledge, right, that we can structure deals without any of our own money and control real estate without any of our own money. So I think if, as I'm looking at markets, I'm trying to balance like, okay, what are we going to buy? Right. Because turns out we're qualified for quite a bit, and I want to get Chris Allen on the call one day to talk about some of the stuff that he has going on, because I think a lot of us on the call, we qualify, like people who may think that they're not bankable or, they can't get a conventional loan. There's loan products out there that are, pretty aggressive and kind of fit for people like us, like entrepreneurs, real estate investors. So I'll hopefully maybe next week I'll get Chris on to just talk about it. It doesn't hurt to sit down with him, because he can look at the situation from all different types of angles. He has a lot of experience, and because I think if your buying power now, then you're gonna be in position to take advantage of what we're all seeing in most markets, which is a down market, right? So the question just really is how much further is it going to go down? And then that's the big question. So, and every market I feel is different. Hawaii seeing a definite slowdown. Although we just got an appraisal for our houses and it's still high, it's higher than I thought it was going to come in at. So, but appraisal is an appraisal, right? It's not an actual buyer coming in with money to actually buy it. So maybe John, since I want to ask these questions anyways, is how is Vegas on the Strip when it comes to short-term vacation rentals? Are they pro or against?
Oh, they're pretty, the hotels here have a big say in the politics of the city. So it's heavily regulated.
Okay.
There's only very specific areas in Vegas that you can do Airbnbs in. And even in those areas, I forget the specific distance, but you can't have an Airbnb basically another one next door to another one. It has to be a certain amount of distance between each. And there's all these regulations.
Right. Yeah, I heard about that. I think Layla was telling me that or something. But what about, those condos, like the Sky condos or like Layla, what was the other ones? The one your friend lives in and stuff?
I can't remember the name, but it was the one right off the freeway. Probably across from Mandalay Bay, across the freeway right there.
It's on Paradise Road.
Oh, that one, Turnberry Towers?
There's 3 of them. There's like 3 towers.
I think I know which ones you're talking about. I don't remember the name, but yeah, there's like several of them.
Towers, I think.
Yeah.
They're kind of right on the Strip, but like towards the end by like Hilton Grand Vacation.
Sahara.
Yeah.
Right. Yep.
So do the people who own those units rent it out short term? Like, do they put it in a pool, like the building pool to be managed? Or
I'm not too familiar with those, but I've seen those listings on Airbnb too. So yeah, I think that's what they do.
Okay. Yeah. Okay, that's good. That's good to know. And the housing market, let's dive into Vegas because like I got so many questions, but and we got John on. So what you're seeing, like, because I from what I hear and what I'm looking at, watching the trends, like the looks like Vegas, the housing market has been going down. We're only like a few months in to it, so it looks like we're just at the tip of it. So what do you, I mean, was the feeling that there's a lot of distress already, or is it still kind of working its way through? Because we still have a lot of equity, right? Most people have a lot.
Yeah, exactly. I think there's still a little ways to go down. So that's what we're seeing for the Vegas market for sure.
Okay.
Yeah.
Okay, that's good to hear. Yeah, it's good to know because that's what the trends look like. But sometimes the media can just spice up everything, right?
Yeah.
So yeah, because like what really got me to really start paying attention is just I saw something on like, I don't know if it's CNBC or Fox or whatever, but about how Vegas market is kind of a leading indicator right now. And then I started looking into it, started calling, Kiko, some of our guys, and it's like, yeah, sure enough, looks like mortgage applications dropped by like 90% or something like that.
Wow.
So, but it looks like there's still some ways to go. Okay. And when it comes to, and maybe you may not be able to answer this, but the supply and the demand in Vegas, right? Because Vegas was always kind of a tertiary kind of transient market, like secondary market, what I've been watching over the last few years is that they have been making moves for it to be a primary market one day, where they're investing a lot into the city, the infrastructure, sport franchises. So my feeling, and you tell me what you think, John, or first of all, I want to ask you why you moved to Vegas. But my feeling is that if we look at the fundamentals of what's going on in Las Vegas, where there's a lot of investment going in there, a lot of people, there's still a lot of money, there's a lot of development still kind of going on. So is Vegas housing market is that a market to come in and buy very soon? Because all the other indicators are kind of pointing to that market. And is that why you moved there, or did you move for just totally different reasons?
No, that was one of the main reasons. Well, one of the big reasons was the weather. Coming from Seattle,
so
we have a lot of rain.
Washington, right?
Yeah.
Yeah.
Right. Yeah, moved from Seattle. So the weather here is great. But yeah, like you're saying, there's so much development going on still. I live on the very outskirts of town. I can look at all these brand new housing developments that they're still working on every single day. There's so much, and there's still so much land to be developed. And Vegas is not a very big city still, even though we have a lot of people moving in and so many Californians. I was just talking to a realtor who's been in this market for like over 10 years, and he moved from California. And he's saying there's so much untapped opportunity out here with all the Californians moving in, people from New York and all these other states coming out here, and Nevada, I feel like it's one of the states that's more business owner, entrepreneur friendly. We have no state income tax and other tax benefits and stuff like that. So no, I agree with you, man. That's one of the reasons I moved here. I see the opportunity out here, and it's going to continue to grow.
Okay. Yeah, that makes sense. Cause I figure like, if you're going to pack up and move from, is Washington home originally?
Yeah, that's where I grew up. Yeah, like 20 years.
Right. Yeah. So if you're going to pick up and move from home, like you must have done some research before you went, and you just moved there, right? Like,
yeah, like 7 months ago now. Yeah. In May, I moved here.
In May. Okay. Yeah. So the reasons were, one, the weather, right? But the other thing was that you knew you wanted to maybe move to warmer weather. So that was kind of what triggered it. But then, of course, you're an investor, you're an entrepreneur. So it's like, okay, where should I move? Right. So
yeah,
Vegas you chose because it seemed like it's a emerging market, even though it's kind of a seasoned market. It looks like it's going through like a change where it's emerging again.
Yeah.
Okay. That makes sense. And there's a lot of people that kind of move into Vegas. No one really is kind of like born and raised in Vegas. I mean, I don't know. I don't know anybody really from Vegas like that. Like that. Layla does. So
There's a lot of people.
yeah.
A lot of
Okay.
people.
Yeah. I always thought Vegas is like you live there, maybe you graduate high school and then you leave. You know, like, but okay. So now Vegas, I would say, is a different market because it is kind of transient. So it's prone to the booms and the busts, right? And but that's kind of like Seattle too in some areas, like kind of a very like it can take violent swings, right? So last recession, my brother-in-law and his friends, not even really knowing what they were doing, kind of just pulled their money together and bought like one rental. That rental has like tripled in price since they've done that, you know, and that was in 2009, I think they bought it. So it's kind of after the crash, during the crash. So my question is kind of when is it going to be prime for us to come in and buy a lot, right? And obviously it's always prime, but you never want to have your main focus on timing the market because nobody wins when you do that. But when you know that there's still some room to go, do you still pull the trigger, right? So are you looking to buy, John, in Vegas, or are you kind of still waiting a little bit, buying some time?
Yeah, for now, personally, I'm waiting a little bit, see what happens in the next 3 to 6 months.
Okay.
But that doesn't mean I'm opposed to if a good deal comes across my plate, I'm ready to move on it, you know?
Yeah, absolutely. Oh yeah, I can't wait to sit down with you, bro. We have so much to talk about.
Oh yeah, it's gonna be fun, man.
Yeah, so yeah, I'll hit you up. And Alex. Oh, what's up, Alex? I'm buying less, but still buying.
What's up, Corey? How are you, buddy?
I'm good, man. How are you? You're
Good,
everywhere,
man. Here,
dude.
I'm in Phoenix right now, but yeah, man, I was just spending a little time in Hawaii. But yeah, a lot less deals over here, but I'm still buying.
Nice. Is it more fix and flip, or are you buying some rentals? What type of asset class?
I'm focusing more on like some single family stuff in a certain area, Southern California, that has worked at the lower price point, and just still buying stuff there that I could either flip or, you know, these last couple ones actually turn into rentals, some short term, and so it just depends. But I'm kind of focusing more on a certain price point in a certain area of SoCal, and whatever I make from there, trying to buy other assets. Still.
Nice.
Yeah.
And are you just seeing what markets are you kind of in? Kind of everywhere, or?
No, well, we fix and flip like in Southern California. That like I mentioned, those properties keep some of the stuff that would be a good rental or something I could really appreciate. Like I bought a house in Hollywood that I ended up moving back to, but it's just such a killer deal on it with a lot of upside that, you know, I kept it. And then we invest in Phoenix because we have an 18 unit here now, but we like the market. We've seen rents kind of still stay. I mean, again, we're at the entry level for this asset class too, so we're not in high end apartment buildings in Phoenix, right? And then the stuff I own in Hawaii, really just because of lifestyle and some of the stuff that maybe I want that like I maybe want to keep or just be a good flip deal occasionally. But I'm not really focusing on doing a lot of deals in Hawaii because, you know, I'm focusing more on SoCal.
Yep, gotcha. You don't have anything in Vegas?
I actually do. I have one house that I'm flipping right now in Vegas. It's nothing, you know, crazy. It's just a little same thing, entry level house. We're trying to wholesale it and didn't really work out. And we tried to sell it to hedge fund, didn't really work out. So I'm just flipping it, making just a basic profit, probably making like 20, 30 grand on that one after the correction. So it's fine.
Nice. Okay. Yeah, that's not bad. But I guess so for what you're seeing in Vegas, what made you get into that one? Is just what deal that kind of came across your lap? That's why? Or
it was like a boomerang, kept coming back. I was like, man, wholesale, but then we couldn't get the price we wanted. And I'm like, well, we have the capital to like just, it's just a basic house and a simple flip. It was nothing intimidating about it. We were just not a market that we buy anything. So it was pretty random and nothing like strategic or anything.
It's funny that you almost forgot about that one. It's like, oh yeah, actually I do have one in Vegas. That's how it was when we had one down there. Yeah, it was just that one was a nightmare though. Oh, it got broken into.
I personally do not like Vegas being in that city at all. But it does a lot of people making a lot of money there. But
Yeah.
I do not like that city.
Yeah, Vegas is like you hate it or love it, man. And sometimes both. No, yeah. Oh, it's good to see you, bro. Good to see you.
Yeah, guys. Anyway, I can help. Let me know. Just always want to pop in here when I can.
Yeah.
Yeah.
Anything you need, brother? It's been a while. What you up to? Yeah.
I don't really. I mean, my team is doing great. I'm always looking for capital for short-term fixing deals, but I mean that's just goes without saying. And I don't just. I mean, it's some relationships, right? So, and I know some people that if you guys have anything interesting, like lower priced in Hawaii, in Maui or Oahu, I'm always interested in open to deals in those two places because I already have stuff. So,
Yes, sir. For sure. Right on. Thanks, Alex. Jake, how you doing, bro? How's your deals going?
What's
Yeah,
up?
yeah,
What's
money
going,
up, right?
I actually wanted to talk to you later too about them. So
Yeah.
I did so my best friend lives in Vegas. He has 3 properties there. One is on the market, been on the market for a long time. I think it was on the market when my first trip to Hawaii when I stopped by your office. That 55 older community. So he's
Yeah.
having an issue with that. It's been on the market maybe over 6 months now. Another one is pending. I'm not invested in those 2, but a third one that I invested with him with, he's going to list it probably next week. He's also a realtor there.
Okay.
So that one is a townhouse. The owner was going through bankruptcy. He got it at a good price point. I think we all in at 206 and he's looking to list at 270, 265. He's looking to list and we'll split the equity 50-50 on that. So he is having some trouble, but what he's been doing is just offering credits, buyer credits to help get his sales. So yeah, one's pending, one's been on the market, and one will soon be listed on market. And that's the one I'm invested in, the one that's going to be listed on market. I'm a capital partner now.
That's a pretty big enough spread where like you should be safe for a lower dollar amount like that. Like, yeah, I think that you're still in the money. It's just, well, 6 months he's been on. That's a long time.
Yeah, that's the Firebird one. That one I don't have any. I'm not partnered in that one.
Oh,
but that one he's thinking about turning into a rental, or he's trying to figure out what to do with that one. Yeah. That one's been on for a while. That one's kind of hurting him. So you gotta stop the bleeding somehow on that one. Yeah, then this other property, I lent money on. I'm in a first lien. It was in Wisconsin.
Yep.
So what happened at the closing, I funded the purchase price and he was gonna refinance me out through a hard money lender. The hard money lender is Kogo Capital. Are you familiar with them?
Yeah.
Oh, that's not a good.
Yeah, Kogo is Kogo. How do you say, Alex? What you just gotta watch out for Kogo.
Yeah, creative. Let's just say that they get real creative, and that creativity can have
How about sneaky?
A high cost if you're not aware of how.
I'll give you an example. That one time, Alex and I were one of our early loans we were gonna close, and the investor was kind of new. But he had a deal for us, and he said, oh, like right in like the later parts of the underwriting and stuff, he said, oh, you know what, like I got an offer I couldn't refuse, you know, and I said, oh, from who, you know, and they said Kogo. I was like, oh, okay, heard of those guys. And he said, what's the offer? And so we offered him 10% and 2 points, I believe. And he's a new investor. Our leverage was higher. But he went with Kogo because Kogo told him that he'll pay 1% per month, 1%. So they wrote the term sheet out instead of saying annual, which is what most people do. They broke it down like monthly. So 1%. So he said 1% per month. He only has to pay 1% per month. And then Alex and I were like, oh my God. And we're like, did you sign the term sheet already? And he said, yeah. And we're like, all right. It's like, unfortunately, there's like, that's a way worse offer than ours, because it's actually 12%. You're paying 12%, annual. They just wrote it out 1%. He thought he was getting charged 1% interest.
1% annual. Not-
Can you guys
Here's
hear me?
Coco. Yeah.
Okay, I just had my screen's not lighting up at all. But yeah, he was paying 12% plus he had to pay points up front though. But he was like, no, I'm only paying 1% a month. We're like, okay, well, yeah, but you're paying it as if it was like a point every
But he had
single
a
month.
back end kicker too. So another point when he exited the loan, which is rare in our industry nowadays. Usually you just pay upfront the points, right? But didn't that guy have like a kicker on the back too? And we're like, man, these guys are sharks. Like
Exit
first
fee.
they're sneaky to put it in like that for a term sheet to a new investor, you know. And then so he signed the term sheet, so there's nothing we could do about it already. So unfortunately, but yeah, and then there's a few other things that Kogo's name would come up here and there. That's why when you say Kogo, it's like, oh, I wonder what story this is gonna be. So
Yeah.
sorry, Jake, go ahead, bro.
No, so I'm glad the borrower is dealing with them, but I'm just hoping that they fund him so I can get paid out and I can exit the loan. So it was only supposed to be a 2-week loan. He was gonna give me a decent return, 5,000 flat fee. But then a good thing I mentioned the last time I installed some heavy penalty fees. So he's already a month past due. So I increased it to like $31 a day. And then now it's doubled. So now it's at 67. So now he's putting the pressure on the title company because they made an error. As a security instrument, I submitted a deed in lieu of foreclosure and he signed it. I didn't know if it's supposed to get recorded or not. Long story short, the title company recorded the deed in lieu of foreclosure. So now the property is in my business LLC, not his. He didn't want to do a quick claim deed because he felt like it would push his seasoning period out. So he wanted to do a correction, but the title company is saying, no, you can't do a correction. We have to do a quick claim deed. So we're trying to work on that now, but he's starting to realize that he's going to have to pay me more and more the longer it takes. So he's like, hey, this is time sensitive. And at first I was getting worried because the borrower wasn't like responding to my emails. And I was like, well, is this guy not going to pay me out? But I already looked online and I seen the property in the county records was in my business LLC. So I was like, I wonder why that happened. And sure to find out the deed in lieu got recorded. So the deed is in my name, in my business LLC, not his. So once we can get that sorted out, he said the hard money lender Kogo is ready to fund him. And then he'll pay me out principal plus the interest. And then I can exit out of that one. But that one is a little, I was starting to get worried about it, thinking that I'd have to take the property. Well, actually, I don't have to take it if it's already in my name. I just have to get the keys somehow. And that's all the way in Wisconsin, you know.
Oh, bro, Wisconsin does it easy, yeah.
So, yeah.
Wow. And were you in first or second?
I'm first on that one, yeah. And the only thing, the error on my part, because I trusted a broker. So this lady, Lisa King, I met her online. She bought me another deal before. I didn't know she was a broker. So she's a broker for Kogo. And it was through her. So she was like, yeah, you'll get, just a 2-week. He just needs the money for 2 weeks. So until the hard money lender, the paperwork goes through and he can get funded. So I was like, oh, okay, quick turnaround. I told him in the beginning, I don't want my capital tied up for that long in case I find a property here in Washington State or somewhere else that I want to add to a portfolio, start building. So he's like, yeah, I can get the money back in 2 weeks. So, but now it's been going on maybe 7 weeks. But I'll be getting extra now. So, and I was like, yeah, you're aware of all the penalty fees, right? He's like, yeah, it is what it is. It sucks. And I was like, yeah, well, it's there in the promissory note, the promissory note. I got the mortgage because they're a mortgage state, Wisconsin. So I learned about that. So I got a mortgage there. So, I've been helping with Keiko on the triplex. I go there every Wednesday. I meet with the contractor there and take pictures, take notes.
Nice. Yeah, I was just going to ask you about that one.
And he just emailed, hey, what's your thoughts on the contractor? So I give him, it's just, he's like a handyman. And it seems like the whole scope of work is a lot for him to handle by himself. It's very different than just hiring subs in different phases, coming in, doing the work. He's trying to do it all himself. So he's like all over the place. He means well, but he just needs to get more structure. Yeah. And a better team, I feel like. So,
well, going back to your deal in Wisconsin, right? Because man, it might be. Are you watching his number? He's going to take a loss on it?
Well, he's going to keep it. So he's actually looking. Is who the borrower going to take a loss?
Yeah. Is he gonna refi and hold it or just
He's
sell
gonna
it? Or
refi and hold it, add it to a portfolio. So like he told me he
okay.
has a bunch of rentals, and I checked his business LLC, and he doesn't have it. He just has all his properties underneath one LLC. It's like real transparent. He doesn't have like any anonymity. So I could see it. Like, yeah, I verified it before I sent the money over. Oh, he actually does own a lot of properties under his LLC. So he's just looking to add it to his portfolio. His target date for rent is January 1st.
Gotcha.
Yeah, that was
so. If yeah, because one thing you gotta keep tabs on is like just kind of check in, because you don't want him to like, you don't really want to go into foreclosure or take over the property, right? You just want the money back and profits. And so just sometimes like and we run into this too with our capital partners, like, so if some of our borrowers are taking long, and it's then you kind of got to balance the scales, where it's like you don't want to charge them too much or make the terms too strict so that you're just driving them deeper into a hole, but that's a smaller loan amount. It shouldn't be too bad. And you should pay, or he should pay penalties if he's not honoring, the promise.
Right.
So, but one thing you want to check too is every county or every kind of market has its own usury laws. So just making sure usury laws, like usury is like if you charge too much, you don't want to pop up on like it could even get in the middle of any type of foreclosure, like if you had to take the property back, right? But then if he contests it and says, well, this guy was charging me this much rates, so like this is predatory, like then it's, you don't want to leave yourself open for that, so just make sure the usury law, like the limits, and it might be some, I don't know, maybe it might be like 20 something percent, and obviously you're probably not charging 20%, but if you calculate it and you find out the percentages, it's probably good to know. California is going through something right now that's really something that NPLA is keeping their eyes on, and what it is has to do with default interest. And so basically what has passed already, and now they're contesting it, it's going to the next court, was that the California has kind of not allowed default lenders to charge default interest. And this is like across the board, so owner occupied, non-owner occupied. So right now the NPLA is kind of working alongside with other trade organizations to try to fight this, because you need incentive for people to pay, pay what they owe, right? So, and if they don't make their deadline, what's the penalty then? Like, they can just keep paying the regular amount, but we can't charge them default interest to motivate them to close out, and honor their note. So there's a balance there. I get it. There is a balance. So just make sure that the usury limits in what that area. Most likely you're not crossing any of them, because usually the usury limits are pretty high. So yeah. But I would still just calculate it just to check your, dot your I's, cross your T's kind of stuff.
Okay, right on. Thanks for that.
In the loan docs that I signed on for, and that's floating out there, because when I was looking to refinance with a construction loan for my Makaha projects, which was at the time, I think we had 10 houses in Makaha, and then a few more all over, but it was ground up, and it was right in 2020. So nobody was doing ground up construction. So I have a loan that I'm paying 11%, and that's Dutch interest and 3 points, I believe. So right now, back then it was hard to refinance with a ground up construction loan. Nobody was really doing ground up, and actually a lot of the ground up players have kind of left the space anyways. So, but in the loan docs, Alex, I don't know if you're still on, but I can't remember the line of what it said, but the default interest will be to the highest allowed under the city and county or whatever state, I don't know whose kind of regulation it falls under, like the maximum to the usury laws, and anything over was an accident or something like that.
Yeah, Ben, I think it was like 58% was the default rate, and then it said if this is above the max allowed by the state law, then this was a mistake, and it should be lowered to the max allowed by state law.
Yeah.
So they're sneaky.
58%.
Yeah, 58.
58%.
And then they put a little like a little fine print in there, like, oh, if this is over, then it would be like
it was an error.
Yeah. They already pre-claimed that, huh?
Yeah. So yeah, it's pretty crazy. The finance side too, like real estate and finance is probably one of the most, like two of the most cutthroat industries, you know, and where if you're in real estate, you're kind of in both, you know. Yeah. Especially like, you know, for us, because you're a lender, right? But you're also an investor. So we're kind of on both sides. So it's very, you know, you have to watch your back, but also keep doing business the way we always do business. You know, the go giver way, I feel it always shines through. And but when I read that line in my loan docs, I was like, wow, I gotta start reading my loan docs more. You know, like,
yeah.
But it's hard when they send you like, you know, 100 pages and like just 10 houses, right? So it's a lot of paperwork. So I'm not going to read through every single one. Like that'll take me forever, you know? So I definitely go through the major ones, like, okay, make sure that's right. But all the other terms, it's like, God, it's so much, you know? And even if you read them, it's like, are you going to retain, you know, like maybe you agree in that moment, but after a while, you're like, you know what? I don't agree with that. So yeah, the lending side is, you got to be careful too. You know, there's loan to own guys out there where they're not rooting for you. They're rooting against you. You know, they're going to give you the money, but they're rooting against you because they want the property, right? So they make more, right? Because they understand real estate investing and that the security in it in private lending too is far outweighs any type of security that you'll get investing in the equities or the capital markets. You know, there is no collateral. So that's the big difference, you know. I guess are you gonna be, so how is the other deals though, Jake? Are you guys they're moving along the project?
Yeah, I got one more in Bellingham. That one matures in February. So I took a drive up there maybe 2 weeks ago, went to the project site, was down to the studs rehab, but they had to jack up the foundation. So they fixed the foundation. The guy running the project has a lot of experience doing commercial remodeling for like commercial buildings. Like he took a Napa auto parts store, turned it into an organic grocery store.
Wow.
So he's very experienced, and I got a good vibe from him. The husband and wife. I would love to do more business with them again in the future. They said they already have interested buyers once it's all done. So maybe it could get sold off market for asking price. Because it's in Bellingham in a nice neighborhood and a half-acre lot, which is rare in that neighborhood. He was saying there's only like maybe 3 lots in that area with about a half-acre. So it's got a good sized property. The house is old, but they're doing everything new. New plumbing, rough-in plumbing is done. I just got an update actually this morning, an email with pictures. Electrical wire has been ran. That'll do inspection next week, and then insulation and walls, drywall will come up. And then I'll go to the project one last time when it's completely done, just to see like the end product.
Yep.
So yeah, it was a good trip. Just go to
Nice.
Bellingham. We went to Canada. The family, we just drove across, went to Canada for the day, ate lunch there, came back since we're like 20 minutes away.
Yeah.
Yeah. So that was a good day trip, all day though.
Yeah.
And
Well,
yeah,
nice.
that's it. Yeah.
Because you're learning too, right? Like
Yeah.
the beautiful thing about being in the lending position, and I tell our guys all the time, is like we're in the crossfires, you know. So like we know what deals are trading for, you know, who's executing, who's not executing, you know, like so like and then we see where the opportunities are too. So when you're in a position where you have you're lending now, right, against real estate, you have a little bit broader scope of the battlefield, I guess you could say. Like you can pick and choose your battle, pick and choose the deal that you want to enter into. And so being in the lending position, you can learn, right? Like how you're doing. Yeah. You're still earning because you're investing, and you have to gauge risk and return probably more than ever as a lender. But you're also gaining knowledge because you have to understand deal structure. You have to understand what the exit strategy is and watch them through execution, so that way, like, you're downloading all their knowledge too, right? So when you see something, you'll know what a deal is and what isn't a deal, like almost immediately. So, because if you're putting your money on the line as the lender, then you're going to have to know the deal, like if it's a good deal or not, right? Otherwise, we're just gambling. So, yeah. Nice job. They made moves fast too. Like it wasn't even a year, dude.
Yeah, it's May, but yeah, just like small daily consistent action. I try to take. I've been reading a lot too, a lot of books. Yeah. This other one that just came out on Bigger Pockets, it was published this year. It's called how to analyze deals, real estate by the numbers. Real estate by the numbers is good. It gives you all these different metrics. I'm sure you guys know a lot of them, all the experienced guys. But for me, it's like, I'm highlighting everything and putting sticky tabs on stuff, and then I can just refer back to it to analyze deals. So I'm still learning that now. But like you said, that was kind of my strategy, was just to lend so I can still invest in some way and earn a profit, but at the same time learn. So then that I can learn from other people's mistakes and their successes, and then I can apply that. Once I'm ready, maybe in about a year or so, I'll be ready to start, taking projects on myself. And
I love
that was kind of my thing. Yeah. But
it's all working according to plan.
Yeah, so far.
Yeah. Right on, man. Well, it's good catching up with everybody. I see Tay over here. Tay's closing a deal. That's the one in North Shore.
Which one is that? We're waiting for a few more things on that one. That's how Ulaya, waiting for the final numbers on the rehab and scope of work and stuff. Yeah. Nice. We're buying a 13 unit in Kansas City. So I'm learning lending with that kind of lending, commercial lending. It's kind of scary. But
with Shannon them?
Yeah.
Nice. And how are you doing? Are they doing good? All moved in?
No. They are packing, what's that called? Pods right now, like the moving pods.
Yep.
So they're removing things from their home, putting them into the pods. And I think they close on their home on next week. I don't know exactly which day. And then they move, I don't know, in a week and a half or so.
Wow. Okay. Yeah. Well, they're going to be boots on the ground though, right? So that's a great partner to have in Kansas City.
Yeah. And like the cool thing with them is it's a family business. So if they're here, then they have like daughters, sons, brother-in-laws there. So like we got a triplex in October and renovations are happening there while they're here trying to sell their home. Yeah, it's really good deal. Cool partnership with them.
Yeah, nice partnership. Well, I hope everybody had a great week. I think Kiko should be back next week for Coffee Talk. I know we have holidays coming up too, and there's a lot of people traveling. So if you can jump on, great. I'm gonna try to line up Chris. Maybe we'll save him for the new year, maybe, because it does get crazy during the holidays and people, schedules are kind of disrupted and stuff. And I really want people to make it to that one because it's opened my eyes, like I was thinking I'm going to have to, get creative and come up with or maybe utilize my own capital because I never really took the time to even sit down with somebody to see if I could qualify for any type of loan, what type of new loan products they have out there. And after sitting down with Chris, like actually not only do I qualify, but it's quite a bit, right? And that's perfect timing because I want to go buy some property, you know, in very soon. And that's why I'm gonna go see John over there in Vegas soon. So I come in on like the 18th through the 21st, John. So I'll text you, give you a call. And if anybody else is in Vegas, you know, like let's go grab coffee, you know, look at some properties, go shopping. So
I'll let my friend Kaimana know, Corey, that you'll be up there too.
Oh yeah, please. I'd love to meet with him.
That's the guy I'm partnered in with the townhouse, and he has the other 2 properties there. So he can guarantee use some of your knowledge for his truck.
Please, I'd love to sit down with him too. Yeah.
Yeah.
Maybe we can all sit down.
18th to the 21st, right?
Yep, 18th to the 21st. Yep.
Good. But I want to ask you one more thing. Do you know what like the going rate is for DSCR loan right now?
Aiden, DSCR.
It's about 7 3/4 to 9%, I would say. That's going to be dependent on the leverage, if it's a purchase, refinance, what kind of prepayment penalty you're looking for. But that's like a general range that I've been seeing.
Okay. Right, you guys offer that product, right? At Kiko?
Mm-hmm.
Yes. Yeah.
Well, yeah, it's not, I mean, DSCR we haven't closed a DSCR loan in a while, yeah?
Yeah.
We have 2 that are closing next week for,
okay.
Yeah.
Maybe it's coming back.
Okay. I'm just asking because that townhouse I'm a partner in Vegas, we're going to try and list it. If it doesn't sell in a month or 2, one option would be a DSCR and see what that is. Then if not, maybe might go conventional and I might use just my credit. So we'll see, but we might keep it as a rental if we can't sell it in a month or maybe 2 months max on market. We'll just keep it. Me and my partner Kaimana there will probably create an LLC together and hold it for the meantime.
Yeah, absolutely.
I
don't know why I didn't think of him earlier. I'd love to meet him in person and sit down with him. Yeah, for sure.
Yeah, right on. Yeah, I just want to see what that is. I know rates will probably change in a month or 2 for the DSCR, but I just want to see it now.
Yeah.
7 to 9.
Yep. That's kind of where it's at. Like, if you get like a bank statement loan, even with Chris, you might be paying about 8.5%. So, but there's no prepayment penalties on the bank statement loan. So the moment the rates are coming down, they start refinancing this thing. Yeah. So right on, guys. Well, hopefully everybody has a great weekend. And if anyone is in Vegas, please reach out. I'd love to sit down, grab coffee, get more info and share resources. So I hope everyone has a great rest of Aloha Friday, and we'll see you guys next week. Aloha, everybody. I'm gonna hang out for a few minutes, talk story.